Hello traders and welcome to another video review. Today is Wednesday, June 8th, 2022. Let's start as usual with the Forex calendar review. Data published overnight are mostly kind of important because we got the GDP from Japan and current account from Japan. As you can see, the GDP of Japan is shrinking to minus 0.1%, which is better than the market forecast of minus 0.3%. However, for the first quarter, the GDP is still shrinking. Nothing will change that. During the London session, we got data from Germany, industrial production 0.7%, worse than expected 1%, and the Halifax price index from UK, the price index increased to 1%, better than expected 0.8%. We of course have construction PMI from the UK. It was slightly worse than expected, 56.4 versus 56.6, which is still way below 58.2, so the construction is going down in the UK. The European GDP is scheduled for release at 11 o'clock. As you can see, the market participants are expecting the 0.3% in the first quarter, and during the New York session we got only data from the crude oil. The crude oil inventories scheduled for release 4:30, and of course the crude oil Cushing crude oil inventories scheduled for release at 4:30 as well. So not many important and market moving data are scheduled for release during the New York session. So we should take a look. Definitely we'll take a look at the crude oil. We will take a look at the euro dollar, and we will take a look at the Japanese yen. So let's start with the technical part. Daily time frame chart of the US dollar to the Japanese yen is showing us what it means to rally, and another fourth in a row day. This market is moving up and up and up, and as you can see, this uptrend doesn't stop here. Even if I will zoom out to the longest period possible, we are still way above the highs from the 2012, which where my data are from. So please notice the fact that momentum is very strong. It's above the level of 76, so right now it's extremely overbought market. However, the momentum is extremely strong as well. The next target in that situation is very hard to tell. It looks like the daily change of the between the high and the low is roughly around 150 pips. So maybe today the target will be 134, and tomorrow it might be even 135. So please notice the fact that this is unstoppable bullish market. For now, there is no sign of any kind of market termination, market uptrend termination, or the trend reversal. Please notice the fact the trend is your friend. So we keep going up on the US dollar to the Japanese yen market. So what is then euro dollar doing? Euro dollar is not actually moving too much. The euro dollar stuck in between the levels of 1.0643, 1.0760, somewhere around here. We might even extend this range to the recent high here at 1.0787, because we got another technical resistance here. However, as you can see, this situation is not really in favor of a bulls, because they are stuck here in between these two levels, and they don't know where to go right now. We got very narrow range here, 1.0789, 1.0809. This is the technical resistance and supply zone. 1.0628, 1.0643. This is the technical supports and the demand zone. Of course, the first breakout give us a target for the next wave. If the resistance is broken, next target is of course the 0.0940. If support is broken, then we're going lower towards 1.0472. Of course, the next technical support. Momentum neutral, so the market doesn't know where it wants to go, whether it should continue this bounce or go lower. So please keep an eye on the current situation on the euro dollar. The breakout will have a consequences. The upside breakout or the downside breakout doesn't matter. There will be consequences in the breakout, in the movement up or down. What is the crude oil doing? Let me just zoom out first, and what do we see here? We see a steady movement to the upside. As you can see, I've been trying to count this pattern here as a triangle. However, it didn't work. Well, it looks like right now what we are doing is still some sort of the ABC pattern continuation. So what we have here, we might have the wave from that top. It would be a kind of a wave A to the downside. We might have the wave B to the upside, of course, and very short wave C. So that's another wave here, and of course this might be one of the options. The other options is that the wave A ends up here, we got the wave B, and we still wait for the wave C to the upside. So please notice the fact that this is still complex correction. We are still trending a little bit to the upside. However, it doesn't look like an impulsive wave progression. It doesn't look like an impulsive wave to the upside at all. We might have some sort of the channel here. However, it looks like this is a complex correction, time consuming, price consuming correction. W, X, Y, X and Z is the name of this correction, which means that we might see another wave to the upside, so not necessarily to the downside at all right now. After this breakout above 120 occurred, next target is 124.65, and then next target is the high of the wave 5, which is at 130.44. However, this is not an impulsive movement to the upside. This situation here looks like we are shrinking. Here we are shrinking the volatility, we are shrinking the ranges, and it might reverse to the downside once the, for example, double top is done, and then we should see some kind of a more impulsive decline in the crude oil. However, if there is no decline, impulsive, dynamic, aggressive decline to the downside, this market might rally even higher towards $140 per barrel. So please keep an eye on the crude oil. This is not the end of the upside movement on this market. So the last but not least, let's take a look, of course, at the Ethereum. What is the Ethereum market doing? We are still probing the level of 1701, which is the technical support from 12th of the May, and it's been tested once, and it's almost been tested for the second time yesterday. This is very narrow demand zone between those two levels, and if we won't bounce soon from this zone, we might find ourselves below 1700, which is the key technical support. As you can see here, this is the key technical support, and then the market might drop significantly towards 1477, $1421 zone. So please keep an eye on the current situation. It looks like this is kind of a triangle pattern. If we want to see something on this chart, I guess the most probable pattern would be right now kind of a triangle. And if this is a triangle, the breakout to the downside should occur very soon. So please keep an eye on the Ethereum. It doesn't want to go up. The bearish pressure is still high, and it looks like we are about to take off of this this lows here from the 2021, the June 2021, and then move lower, significantly lower towards 1400 area. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.